This Bitcoin whale just entered a $276 million Bitcoin long. In today's video, we'll be touching on exactly this. We'll also be going over the recent Bitcoin price action, taking a look at altcoins and how they have started to actually underperform Bitcoin once again, and of course, touching on the stock market. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. So as we can see here on Hyperliquid, a whale has just opened a massive $276 million 40x long position on Bitcoin with a liquidation price of right around 95K. Now you'll remember that 95K actually coincides with the exact breakdown region that we've been covering on the channel over the past couple weeks. Despite Moody's credit rating downgrade, he's increased his position aggressively, and we'll get into that in today's video as well. He is either pure madness or he knows something that we don't. According to crypto investigator Zach XBT, a lot of scammers will enter big positions like this to try and wash money in the crypto space. So make sure you're also aware of that. You shouldn't see this and think immediately that Bitcoin is just going to pump massively, because I don't actually think that that's the case. If we take a look at the Bitcoin chart, again, very much the same story. Nothing has changed, and quite frankly, it's been a very boring and choppy week. As we can see here, we're still within this range between around 102.5K all the way up to around 104.3K. Of course, we had some wicks in both directions, but this is the key level that I have been looking at. Yes, you can extend this box if you want to, but ultimately the picture remains the same. Bitcoin just continues to consolidate, and until we get the confirmation in either direction, I would be extremely careful with trading this market. The reason being, everyone is calling for altcoin season, but in today's video, I'll actually show you that a lot of the weekly charts for altcoins are actually looking like bearish retests. Let me get into that later. But right now, what you want to understand here is that if you want to go aggressively long, the next thing that you'd want to look for here is a break above 106.2K, holding there on the daily support. That is the most important level to target new all-time highs and beyond. For those of you that have been watching the channel over the past week, I know that I'm repeating myself, but ultimately nothing has changed and you should not be getting aggressive here. If we get a confirmed break below here on the daily time frame, that is when I would be targeting the breakdown region. Now you'll remember here that our whale's liquidation price is right around $95,000. And if I go to the Bitcoin chart, a confirmed daily close below this level here would bring us potentially all the way back down to this breakdown region. And as you can see, it sits between just under $94,000 all the way up to above $98,000. So if we end up breaking here on the daily time frame and we get that confirmation, I do think that we will be targeting the breakdown region to hopefully hold it as support, and we would obviously be liquidating this massive whale if that's the case. And to be quite frank, since the pump from the lows, charts are not looking that great. We can see here the total crypto market cap excluding Bitcoin. We got a wick right to this all-important level, right around $1.25 trillion. The reason why this is significant is because this could signal a pretty big reversal to come for the entirety of the crypto space. This doesn't necessarily have to mean Bitcoin, but this chart tells you everything you need to know. As you can see, we got a massive pump, and now we are seeing a lot of rejection. This is a very important level. And looking at this chart, you can see that even in this cycle, we have not been able to put in an all-time high for total 2. As you can see, the previous wick of the last cycle around November 2021 brought us all the way up to around $1.7 trillion. And right now, we hardly made it above the $1.6 trillion level, and that acted as resistance on the daily time frame, the weekly time frame, etc. Now, this is the weekly time frame, and what you want to look for here, if we are to see continued pullback here, it's likely that the RSI will come back lower, and right now we are entering overbought territory, so make sure that you're careful. This also coincides with my theory that we will likely see a retrace back to the breakdown region as Bitcoin still chops around in this range. But we cannot ignore the charts. If we continue to hold this key level as support, I still think that we could make our way to at least target this previous wick that we set, but as I mentioned, I don't think that we're quite ready yet to get a daily close above 106.2K. If we get that, as I said, long your longs. And if you'd like to trade Bitcoin and altcoins, whether you want to go long or short, I have two very solid exchanges for you. The first one is BTCC. You can earn up to $10,000 in rewards for signing up with the first link in my description down below. But the key feature of this exchange is that you can actually trade tokenized stocks with leverage. That means Google, Apple, MicroStrategy, Nvidia, a ton of different stocks that you would normally trade. Here you can trade with up to 500x leverage. Now the next one is of course weeks. I've talked about this promo at length, but there's still a chance to sign up. Here you get a free $100 for the first 100 users that signs up with the second link in my description down below. All you need to do is connect your phone number and your email. And of course, they also have 20% deposit rewards, and you can earn up to $30,000 in bonuses. I use these two exchanges on a daily basis, which is why I'm recommending them to you. BTCC up here, and then weeks to enter that quick promo for the first 100 users. It is the second link in my description down below. And back to our charts, looking at USDT dominance, when this metric goes down, it is inherently extremely bullish for crypto as a whole. But when it goes up, it's bearish. And as we can see on this chart here that I drew all the way back from October 2017, we can see that we are now holding a pretty pivotal support level right here. We wicked below it, and the most bullish case scenario would be for us to actually have closes below this level to hopefully then target the 4% region, which would tell us that the top isn't quite in, the local top that is. But so far, we are holding this level as support, which could indicate that we are approaching a local top and there's not that much fuel left in the market. And it could suggest that this metric will start its uptrend, meaning that it is inherently more bearish. Now, the next thing you want to look at here, I just wanted to go over some altcoin charts because they're all basically showing the same thing. First of all, let's look at Solana. This is the weekly chart, so when you zoom out, it helps you really look at the bigger picture. Yes, we day trade sometimes, but for the most part, when I want to see where the trend is headed, I really zoom out. And what we can see is that we got a pretty nasty wick to the upside, just under a $100 billion market cap, and then we came back down, now sitting just above $86 billion. Now, is this going to be a reversal candle, and was this going to make us roll over? Because we can see here that we got rejected at a very important level. This level was set back in March 2024. Then we also got that pump to rejection back in February, which brought us all the way down to these lows. And now we are getting rejected at this all important level once again. This isn't the only chart. If we take a look at SUI, for example, it is very much the same case, although we did make it past this previous zone. But SUI is a relatively newer cryptocurrency with a lot less price action to go over. But as you can see, it's still very much the same weekly chart. Is this just a consolidation from 2 weeks ago? As we can see here, we got that red weekly candle and then a massive pump to the upside. Or is there more downside to come? I would honestly love to hear your thoughts in the comments down below. Comment down below what you think, and I will make sure to get back to every single one of you. Now, the next thing here that I want to show you, also we have XRP. This is even a nastier weekly candle. As we can see here on the chart, let me just draw this out for you. This is a pretty important level, and we wicked above it, and now it looks like we're potentially going to make our way back down. The next one that I just wanted to bring up, just to throw some memes into the equation, another pretty nasty one. Despite the fact that WIF really sold off massively, we got a pump here from the low, and we made it right around $1.30, and then we got a pretty severe rejection. This weekly candle is still green, but ultimately when you have massive wicks to the upside like this and a small body here, it could be indicating that a reversal is imminent, at least for the next week. Of course, a lot of this price action will be determined by Ethereum, you guessed it. And as we can see on the Ethereum chart, we did get another pretty big wick to the upside, very similar chart to the rest of the altcoins. And the most important chart that we need to look at as it pertains to altcoins themselves is actually taking a look at ETH against Bitcoin. You'll remember that in my previous videos this week, I talked about our massive pump here, holding the previous support level from 2019, but I did warn you that we should be cautious until we can hold the bull market support band as support. The reason being, we got some pretty massive pumps beforehand on ETH Bitcoin, as I'm circling on the chart here, and every single time, if we made it above the bull market support band, we weren't able to hold it as support, and then we just bled lower, or we actually got rejected before getting above this level. Currently, ETH Bitcoin is getting rejected at its bull market support band, which are these two lines over here. So until we can get daily confirmations above here, I still don't think that the altcoin market is the greatest play. Bitcoin gives you the highest risk-adjusted returns. I know you might be getting annoyed of me saying that, perhaps even bored. Believe me, when it's time to flip to altcoins, I will be flipping to altcoins, because the thing with altcoins is you need to be extremely fast, because you get 4 to 6 weeks of extreme outperformance from altcoins, insane gains to be made, and I will make sure to be on top of it. But right now, we are not quite at that level, as we can see by this metric. And this brings me to, once again, Bitcoin dominance. As you can see, here are the pumps from Bitcoin dominance. We continue to go up basically for a 4-year period, and I will not stop covering this on the channel for you guys to really get the message. I know a lot of people have already started to ask me in the DMs, hey man, should I be accumulating altcoins aggressively now? No, not quite yet in my opinion. Of course, that's not financial advice. You can do whatever you'd like to do, but I'm just sharing with you how I'm navigating this market. Every single time that Bitcoin dominance goes down for a few days, all of your favorite influencers say, hey, we're getting the altcoin season. Prepare yourself. Accumulate altcoins right now. Guys, take a look at this. This was the election altcoin season. I showed you this chart before. We got a pretty big downtrend in Bitcoin dominance, only for us to pump up aggressively afterwards. And I think this is the same thing that played out over the recent weeks. As we can see here, we got a little bit of a dump here for Bitcoin dominance. But if I zoom in close enough, what do you see? These are some pretty aggressive green candles for Bitcoin dominance. And this is the daily time frame. As I said, I think we're going to be hitting 66%. Right now, we're sitting right around 63.6%, but all you need to know from this chart is that Bitcoin will still be giving you the best risk-adjusted returns in the crypto space. Now, short-term trading, that's a whole different thing. We have my Telegram group for that, where I provide some signals with my analysts. And if you want to join that, just make sure you join my Telegram group down below. And all you have to do is DM me the word signals, and I will make sure to get you onboarded. And just quickly to give you some more perspective, if we take a look at the weekly chart of Bitcoin dominance, this looks quite the contrary to all of the altcoins that I showed you. A massive wick to the downside, only for us to pump and move on much higher. It would not surprise me if this just continues to go and then we hit 66%. Okay, so now that we covered that, let's quickly touch on the stock market. There are some concerning signs. As we can see here, put volumes are surging. The Magnificent 7 stocks saw massive put activity beginning at 2 p.m. on Friday. Heading into the close, there were $33 million of Magnificent 7 puts purchased. For the first time this week, puts have outpaced calls in these tech stocks. So let's see how this develops. Obviously, $33 million in the grand scheme of things is not that big, but if this progresses further, we could have a pretty bloody week next week. But in the meantime, if we do look at the stock market, it is looking pretty promising. And there's a couple of scenarios that I want to go over by one of my favorite analysts. But as you can see here, right now, there is a yearly open that we are holding as support. Let's see if we can continue to hold this level as support. And if we can, it's highly likely that we target the highs. Or maybe we get a sweep and then move lower. But no one can negate the fact that this was a massive pump. And as we can see, if I measure it from the bottom all the way to where we currently closed on Friday, that is around a 23% pump. Now the question is this just a dead cat bounce? If it is, it's a pretty massive one. Let's hear what Benjamin Cowan has to say here, because there's a lot of debate going on with the S&P 500. The rally that we just had was not that difficult to anticipate, as the market will often get a big bounce after 20 to 21% drawdowns, especially in short periods of times. That's what we were talking about on the channel. After that drawdown, we did discuss the high likelihood that we would get a massive relief rally. This relief rally is actually taking most by surprise. The market will also frequently bounce after sweeping lows from a year before. Here we are. All of that has played out, so now what? This is a little bit lengthy, but please pay attention here because I think there's a lot of value in this post. The thesis for either path is somewhat believable. Path 1 is the bear case. The bear case is fairly straightforward. The unemployment rate has been trending up for the last couple of years. The market was looking for a reason to kick off the downturn, and uncertainty from the new administration as it relates to tariffs was the perfect event to swing momentum in the other direction. There has been a huge bounce by XPX, seemingly following announcements of trade deals, but tariffs are still in effect, and even tariff pauses do not actually mean pauses. They just mean less tariffs than previously announced. We know this because President Trump did come out and say that all of these tariffs still apply and they're still negotiating, which means that this phase could simply be the return to normal before we have to face the music of rising unemployment and potentially rising inflation once tariffs make their way to the consumer. But the flip side to that was that inflation did come in lower than expected. The reason this could be detrimental is because tariff uncertainty as it relates to inflation could cause the Fed to not cut as early as they should. And we went over the betting markets in one of my previous videos. Right now, there's still an 80% chance that they will not be cutting rates in June, so make sure you're aware of that. And this might increase the likelihood of a hard landing. Since we had negative GDP in Q1 2025, it would seem reasonable to get a rate cut under normal circumstances, especially with headline inflation at 2.3%, as we just said, but the Fed is and will likely continue to not cut rates until it becomes more clear how tariffs will affect the inflation data. If there is a spike in inflation, the Fed's hands could be tied to come to the rescue of the rising unemployment rate. If this scenario is to play out, then one would expect SPX would make a lower high in May, June at the latest, and put in new lows by August, September. And if we take a look at the stock market here, that would bring us all the way back into these levels. And so by the looks of things, it is almost decision time. The bull case is also straightforward here. Markets panicked and had a tariff tantrum over higher than anticipated tariffs. But now that many have been reduced, business can continue as usual. Prices of goods and services might go up, but if the consumer is not tapped out, then the economy could simply continue churning along for a while as rising costs of companies just get passed to the consumer, as they always do. A new high by SPX would be more suggestive that the market has shrugged off the tariffs and is no longer concerned about them. After all, the market has shrugged off plenty of things over the years. This would once again speak to the resiliency of the US economy. In that case, it would also make sense for the long end of the yield curve to go higher, as the implication would be that the economy is still doing okay. So, the market is at a crossroads. Buying stocks in early April was not the hard part. The hard part is what comes next. The path for this upcoming summer is still open for debate and can obviously be decided by the next macro data points, which is the unemployment rate and the inflation, which comes in next month. If tariffs show up in the next inflation data, then it would likely put the SPX rally on pause. Or if the unemployment rate trends up this summer, it could also put the rally on pause. If both inflation and the unemployment rate remain low, then the market momentum would likely continue. The cool thing here is that you don't actually need to stress, because market tops actually take a while to play out, which is why panic selling early April was never a good idea. We were shorting the market as soon as we got those daily closes below 106K, but as I shared on the channel, I was accumulating a ton of Bitcoin and Ethereum right around those lows because it touched the previous support level from the prior range back in 2024. So basically, it was a winning strategy in both directions. If you start to see that the market cannot make a new all-time high within the coming month, then it may be time to start bracing for a pullback in Q3. And this is exactly what I would bring your attention to. If we start to get daily closes below the yearly open, maybe we can even go ahead and trickle on higher to these levels, form a lower high. Then I do think that this might not actually be the low for the stock market, and we could be seeing much worse. Now, for Bitcoin's sake, obviously, if stocks crash, Bitcoin will likely crash as well. But I've always said that I do think we're going to come back down and test this breakdown region regardless. Whether we get that aggressive wick to the upside to shake out all the shorters first remains to be seen, and I will make sure to keep you updated on the channel. And because of all this uncertainty and how Bitcoin dominance has continued to go up despite your favorite influencers calling for altcoin season, I am still not willing to add a bunch of altcoins to my spot portfolio. I don't necessarily consider Ethereum as an altcoin, but wherever it goes tends to determine where the rest of the altcoin market goes. But from a spot holding perspective, I hold Bitcoin and a little bit of Ethereum in proportion to that Bitcoin. If you enjoy the content, make sure to smash that like button and subscribe, and I'll make sure to keep you updated in tomorrow's video.